If you start snoring, you get the boot. Deal? Deal. Yo, yo, yo. You hearing the dogs and everything? I had to round up dogs. My daughter just got home from school. It's chaos. Absolute chaos is right. It's like a circus. As soon as they hear my office doors, I got literally 3 doors, and I still could hear them. But they hear the door. As soon as they hear the doors, one door crack open, forget it. They get all pumped up. All right, let me get some cups out of the way before I make a disaster here. This is garbage. So how's everybody doing? Let me mute everything. All right. All right, let me see. I got a couple things. I could always get them if I need something else we're talking about to look at. All right, we're time here, right? Yeah, we're good. Live chat. All right, so let's get rolling here. A couple things a couple interesting things I wanted to talk to you guys about. But let's just tackle the overall market and what we've been seeing since last Thursday we were on here. And let's start here, right? Let's go big picture first, and then we'll dive in to shorter term time frame stuff, because I think that's what it's more about here. But as far as big picture focus, those of you who know, especially if you're Steamroom members, we pay attention to the credit markets. We weigh on them quite heavily for our big picture signals. Again, the rationale there is before we would ever be able to pick up on anything that's having an impact on the market and stressing any caution or importance, the credit market's probably going to sniff it out long before we can even get wind of it, right? And what we've been seeing throughout this pullback, the credit market signals have been telling us this has been nothing more, again, to this point, all right? That's the beauty of the market, and the dangerous aspect of the market is that things can change on a dime, right? But to this point, our credit market signals have been indicating that this pullback off the highs has been nothing more than basically just a positioning unwind. And I would put positioning unwind / buyer strike. Because, and the reason I say that, and you remember, we spent some time on this. Going into earnings season, you had what we like to call a lot of forced buying, right? Players, a lot of funds, hedge funds were caught flat-footed, offsides, off the SIVB lows, and really didn't have much exposure to anything going into this recent quarter of earnings. And you had this scramble for exposure, especially in anything AI related, anything mega cap, NASDAQ or tech related, where they were just buying the daylights out of these things. Any little dip in Amazon, Apple, Tesla, sweepers were right there to gobble up any little weakness. And these are active names, and what you'll see when things get bullish to an extreme, the action in these names become just predominantly one-sided. You'll see nothing but call buying. Very rare you see any multiple put sweeps in these names, and they're there to support all dips, okay? But there's a difference between when players and funds are forced to buy and when they want to buy, right? And a lot of times, that's what I like about weakness. You see the true colors, especially out of the order flow, right? When things look awful, no one's forced to buy, right? Those are the real buyers, right? The players who have real conviction in a name or see value in a name. They step up to the plate and buy into weakness, and even more so, they stay committed, right? You'll see them continue to show up regardless of what the stock may be doing, right? If the stock's even still weak or lower than where they started buying, they'll continue to add. And that's what I mean by real buying, right? So if you rewind, that was the thing I was excited about most, right? We're going to get a feel for the real risk appetite out there. okay? And what we've been seeing is a lack of that risk appetite, right? So this pullback has been predominantly crowded positioning. You had a lot of these mega cap NASDAQ names and semiconductor names that just got way too crowded, went from one extreme to the other. So we've been seeing an unwind of that gradually. And on top of that, we've been seeing a buyer strike. And the buyer strike has looked like extremely selective. I can't even stress how selective and extremely selective I mean by it, but extremely selective buying in a few names outside of weekly and front month strikes, right? And we've gone over a few of those names the last couple of weeks. Energy names, right? We talked about a few of those that they bombed. Like, you could see the difference in buying that we saw in like MPC or PSX, right? If you remember, we spoke about those names that caught some ridiculous buying multiple days, and everything else, right? It's just a completely different complexion, a character to the flow, to the order flow. So we've seen some selective spots attract buyers. Energy, one of those spots. Even Caterpillar saw a nice day of action a couple of weeks back, I think it was. We'll go over some of the names. Zoom, a more recent, seeing some real interest, right? So stuff like that. But no sector focus, no factor focus, right? And that's another thing I was really interested to see into this pullback, because the market is not crowded across the board, okay? Off the SIVB lows, the bulk of the buying took place in mega cap tech, not even tech, mega cap tech, and some of the large cap semiconductors, I would say. Okay, towards the end it trickled down, right? We spoke about that. It was trickling down and spilled over into other things. But the bulk of the buying off the SIVB lows was really concentrated, okay? So what was interesting about this pullback once we got it, well, I was curious to see where that money would rotate into, right? If they start selling Apple, they start taking some profits in NVIDIA, AMDs, all these names, there were places that they can go, but will they go there, right? Energy was out of favor. We were talking about, would they go into energy? They have, right? But an area that they haven't, that a lot of us thought might be a spot, and again, there's good reason why we wouldn't buy it, but that's a lot of times, that's when we see the buying, financials, okay? We've been seeing, buying in some REITs, and a few underbelly regional bank names here and there. But the major players, right, JP Morgan, Morgan Stanley, Goldman, or any of the larger banks, the more well-known banks, the more active banks, no interest, okay? And even the cyclicals, like we saw some action in Caterpillar, a few other names, but nothing aggressive, nowhere near aggressive as we would like to see, right? It's obvious they're not making a bet on any particular group at this point outside of energy, okay? And for this market, in my opinion, to see any upside follow-through, okay, to new highs again, they have to get aggressive. Buyers have to have an appetite and get aggressive in other spots besides energy, okay? Being aggressive just in energy is not going to cut it. Right? So if this market, at whatever point it has in its mind to go to new highs, or, this correction comes to an end and we enter another bullish phase, whenever that may be, we're more than likely going to see sweepers bomb other things. Now, we can go a period of time where we don't see that, maybe longer than all of us would like, but that right there is a strong signal in itself, telling us that we're still in this, whatever label you want to put on, correction, consolidation, right? And one of the signs that this consolidation comes to an end is because is going to be sweepers getting more aggressive and other things. All right. So that being said, our credit market signals are indicating to us this is just your run-of-the-mill pullback, all right, based off positioning. But alongside it, there's a buyer strike, and for whatever reason, could be, players are a little skittish seasonally. All right, we talked about. I stress to you guys, forget the seasonality, records, and statistics. All that shit it irks me, right? I can concoct seasonality and make it sound bullish or bearish, whatever, however you would like. Okay, I joked around on Twitter with one of my posts, right? September is an awful month, but if the market's up 10% before September, it's a bullish month. But if the year started off bearish and September was bullish, and we're up 10%, then September's bearish again. It's all nonsense, okay? What I can tell you from my experience since 1998 that I've been at the desk and watching this game almost on a daily basis, okay? September into October scared the living shit out of me, okay? I don't know the stats. I don't care about the stats. All I know is every travesty I've ever been a part of in this market, for whatever reason, tends to happen in September, okay? Again, you guys call me conspiracy theorist, put my tinfoil hat on, whatever. Okay? But I'm seeing debacles take place in September. Okay? People's career ruined in the month of September. And I know if I feel that way, most players who have been in this game long enough, like I have, are going to feel very similar, right? So they may be more reluctant, right? I'm a little more hesitant to put on any aggressive risk. They maybe want to take a step back and let's see how things shake out before we step on the gas. Again, I'm just brainstorming here. I'm giving you some of the reasons why we possibly are seeing a buyer strike. Maybe people, are trying to get a gauge on, right, what do? We buy the cyclicals? Is the economy going to slow? Is the economy not slowing, right? Is it too early to buy tech? It's too crowded, not much of a shakeout there yet. The banks, rates have been creeping higher. The banks have had problems when rates. You understand this? There are a lot of things, there are a lot of excuses out there. And it's one thing if positioning was so washed out where you could ignore a lot of these excuses, right? If nobody owns anything, then you don't care about the bearish excuses because nobody's long anything anyway, right? Your downside should be limited. But when you're coming off a period of forced buying and this consolidation just started, it's probably prudent that some of the big money out there is taking more of a cautious approach. And what's hysterical, I'm going to show you in a couple of minutes what hedge funds have been doing in single names, in individual names. It's hysterical. Right? I mean, what I just explained to you, right, the mentality of what they may be thinking, I take that from what their positioning has been looking like over the past couple of weeks. Their heads are spinning. All right? So again, it goes back to the point, even more reason why we should unrack our brain and try to handicap this thing, because the smartest minds on the street can't figure it out. Okay? None of us or anybody on Twitter is going to figure it out for us. Okay? It's a difficult time. All right? So again, to dumb it down and make it simple, our bigger picture signals are telling us this is just a run-of-the-mill consolidation correction. Doesn't mean we can't go lower, but what it means is weakness will bring opportunities, right? Whether tactically, when people get a little too bearish over the short term and you can look for squeezes, or when we start to see some real buying coming into this pullback and starting to position for upside in the future. Right? So the difference would be if our credit market signals were signaling caution, you kind of want to take a step back and do absolutely nothing, right? Until everything shakes out. So that would be the difference there. All right? And here's what they look like. Here are credit default swaps. Again, when simple English, when this chart is trending higher or even getting aggressive to the upside, I don't care if you're Houdini, you're not going to make money on the long side, especially in the indexes. Okay? It trades almost a mirror image of each other. But when these things are contained, okay, even though the indexes may not be rocking to the upside, underneath the hood, there are sectors and single names that will outperform significantly, right? So as long as these things remain under control, eventually we will continue to find spots to make money on the long side, in particular sectors and subsectors and single names, okay? So that playbook is still alive, no damage done there. This, I always look at after default swaps, credit spreads, same thing, right? Tame, completely calm. Now, again, I want to stress, because we talked about this in the past, it's not signaling new bull market, risk-on bull market. We talked about that, right? It's not signaling new Fed-induced bull market that we're used to, okay? But on the flip side, it's telling us that, one, the Fed is not involved rigging the game like we dealt with in 2022, artificially pushing markets lower, or risk assets lower, okay? That's the most important. And two, there's no cracks in the plumbing. There's no credit event manifesting in the background, okay? And in this environment, especially after the Fed, as aggressive as they were, raising rates and tightening liquidity and all that throughout 2022, that risk has gone up dramatically, right? An event like that. We saw that with the regional banks, okay? If we do get some sort of event, right, some sort of headline or news, something in that arena, this is going to be the first place I look to see if it's legit and has any teeth to it. Okay? Again, going back, for those of you who weren't around, SIVB, when shit hit the fan with the regional banks, you had a little movement. Where'd it go? Oh, you had a little movement in these credit indicators, and then after that, right here, they stopped on a dime. Even as the news continued to get worse, right? There were more and more threats of regional banks going under. Right? Credit Suisse was forced to get merged with USB. These things never broke that high, right? So that's why we pay attention to them. Another big picture thing that we pay attention to is how the only smart money, the true smart money, is positioning in the futures market. And again, off the SIVB lows, they got aggressively long off that fear. Market ripped, and for the last few weeks, as you guys know, we've been talking about it, they have unwound that long position. Now they are still slightly long, right? Over the last week, you could see they paused the selling, similar to what they did a couple of weeks back, all right? So we'll see, we get another, I don't know if they update tomorrow, but maybe Monday. We'll see how this shakes out, okay? What we would be concerned about is if these guys continue this trend and start to aggressively tack on hedges. Okay, one reason they would do that is if the hedge fund crowd or the retail crowd get aggressive into this pullback on the long side. All right, so they take the contrarian approach and they take the other side, as they should. So something to keep an eye on, but again, this is more wait and see than anything else right now. Listen, you can't make anything bullish out of this, okay? There's nothing bullish about what's been taking place, but you don't want to make it out to be more than it is, right? Let's see if this continues. If it stops here, obviously it's not a major concern, but if it continues, then it's something to be concerned about, okay? What do we got here? This is hedge fund as a whole. Hedge fund overall positioning in individual names. Now, if you guys remember, if you've been paying attention, what we were worried about is when this market just started to pull back. Initially, first week of a pullback, hedge funds bought that dip, which is rare, right? Weakness usually shakes out players, Okay? When players are eager to buy weakness by a dip, a lot of times that can lead to further selling. Okay? And so they bought that initial dip. We were concerned about that. Look what's happened since. Okay, now they were underwater on that initial entry. Okay? They got shaken out of that. And then now you could see, not only did they get shaken out of their long exposure, they dipped their beak on into the short side again now. Right? So this is hysterical. So no conviction behind that initial buy. Right? As soon as that trade went against them, they got cold feet. Now, for those of you who are look at the glass half full and want to be bulls or optimistic about the market as a whole, that's a good sign, right? That's exactly what you wanted to see. Over the short term, it's bearish for the price action, right? Look at, and that's what we're seeing. You could see all the, especially the crowded names, have seen some selling, right? Apple had some negative news, seeing some selling. So the more crowded names that they were parking their money in on the long side, you could see it in the price action. Hedge funds move big money, okay? But what happens is, once that initial pressure on the market that they apply on the market, now they're short. As that momentum turns, it's the complete opposite of what they just went through, right? Now they get squeezed on the short side. So that's the good news out of this, is that once this selling dries up, once they're done in a sense, okay, now they sit short, and the market guys have a tendency to rip their ass every time they're done selling, right? So that's what we're waiting for here. The likelihood is we'll probably see this thing over the next few days, next few updates, die down, right? At some point, either they get a little more aggressive and really dive there deep into the short side, or they're going to level out around here, and then we're probably in store for a pretty healthy squeeze once the momentum turns. Okay? So that's a good sign. Now, the thing is, too, if you look at the market, right, I wouldn't even put it in the correction camp here. It's more of just a lot of these NASDAQ names that are experiencing profit taking, selling, right? Not really across the board. Like you see, there are days that the Dow is up, okay? I think the problem, what's not holding the markets up right now, is the buying on the other side is not as aggressive as the selling is in some of these crowded names. One. Two, a name like Apple, it benefits the market on the way up, but it's going to weigh on it on the way down, right? If Apple's down 4 or 5% in a day, how the index is going to rally, right? There's going to be a lot of buying in a lot of different things for the market to offset Apple seeing selling pressure. So that's the problem with the indexes right now, right? It's very misleading, just like it was on the way up. Right? When they're buying Apple, Nvidia, and just 3, 4 names, you heard a lot of people complaining about it, and the S&P and the NASDAQ's ripping. Well, the rest of the underbelly of the market didn't even move. Right? So we're kind of seeing the opposite of that. We're just seeing the unwind of that extreme. All right? So that's what hedge funds are doing. Okay? And now, again, keep in mind what hedge funds, this is hedge funds in individual names. And this green line are hedge funds in the futures market. So currently where they stand, they just got short single names as a whole, okay? And in the futures, they've covered a lot of that short position, and we'll see the next update whether they decided to short again. If they do the same thing they did in individual names, if they take the same action in futures, what we're going to see hedge funds add back some of the short exposure to futures, and you'll likely see Sharpies add back some of their long exposure if it follows the action in single names. All right, but really interesting You can see already how things are shaking out. And again, I just posted this, so I know most of you are aware of this without even looking at charts or anything, but you know, the crowding in the market has all been in tech, right? You look at like here in 2023, this is tech, and everything else is almost going in the opposite direction. Look at cyclicals. Look at this. All right? So I think that's the reason to be optimistic about the market not necessarily falling apart, especially without some sort of credit event. Okay? Tech can experience some volatility. Tech can see some selling from time to time and be in at the least some sort of consolidation as it works off some of this long exposure. But there are so many other things that can see rotation. It's not a given that they do, right? Because that's what we're seeing now. We're not really seeing much rotation at all. But it's really hard to see if tech is heavy, that we just assume that everything else will be heavy with it, right? Because it wasn't the same on the upside either. So it's going to be interesting to see where the money finds a home on the long side when it does. It's a matter, in my opinion, it's a matter of time, and there's no way of knowing, no way of forecasting when, right? And that's the trouble you could get into forecasting. Like, look, the financials are ripe for rotation, right? Like the financials are in a position where if you want to be a contrarian and you're looking for rotation, that's where it should go. But they possibly may not see rotation for a reason, right? There's larger forces at play. And especially with rates creeping higher, we've already seen how financials have experienced an issue, regional banking side and stuff like that. But again, we'll see. Cyclicals are a lot of stuff that's economically sensitive. The financials are in the cyclical camp. The Caterpillars of the world, the Deeres of the world, a lot of stuff that you would label economically sensitive, right? Tech, there are even cyclical tech as well, okay? NVIDIA, Apple, a lot of the growthier type names, they're labeled like secular growth. In other words, software names are gonna grow numbers regardless of economic conditions, right? Unless you're in a catastrophe, okay? They do well even in a slowdown. Tech names, they're looked at almost as a defensive trade these days, right? They hide in the Apples of the world and stuff like that. When players are bullish on the economy, right, they're buying cyclicals. They want stuff that's heavily tied, heavily weighted to the economy. The economy's doing well, it should show up in their numbers. All right? So that's generally what gets thrown into that cyclical camp. But yeah, financials are a part of that. Financials are a big part of that. And they've been significant underperformers. So again, it's not all of tech, and going to that point, it's not all of tech that's crowded, right? I'll give you an example. I think this is the perfect example. Everybody thinks of the semis, okay? And especially off the AI rip and everything else, the semis have done well, right? Here's SMH, huge rip, okay? Now, you guys know NVIDIA, you know AMD, you know all those high growth semis. But there are more cyclical semis, okay, that didn't come close to participating in that rally. Texas Instruments, right? Look at this, straight out chop, nothing for a while now, okay? So this is more cyclical, okay? NXPI, Micron, right? So it's not everybody thinks of semis. They think of just NVIDIA right now because it's as hot as it's been, or AMD, which is popular, stuff like that. There are cyclical semiconductors that a lot of times will thrive when the economy is seeing growth, when the economy is doing well. But in a slowdown like where we've been they underperform and they do nothing. So, again, it's not really sectors, especially these days, right? Because you could have sectors that there's cyclical growth, and I think the opposite is secular growth. I think that's the label they put on it. But that's what I mean by that. So, but listen, you don't even, well, here's the thing, and this is where I differ, a lot of Steamroom members differ from some of the people out there. For us, we don't need to really know of these names ahead of time. Because we want to see sweepers introduce these names to us. You understand? We want to see sweepers come in one day and decide to tattoo a Texas Instruments, which we haven't seen sweeper activity in forever. Right? And I remember times Texas Instruments catching missiles, right? Or an NXPI, missiles. Or a Micron. You guys know Micron flow when it gets hot. Okay? So, the prudent route is, right, maybe you want to know of these names, but you want to wait for sweeper confirmation to confirm that that rotation is in play. Right? Because it's one thing to forecast or predict something happening, right? A rotation happening or something of that sort. And it's another thing to get confirmation of that happening, right? That's the edge of the order flow and the activity. We're getting confirmation that there are other eyeballs on that trade. Otherwise, you could be in that trade sitting there waiting for a rotation till you turn old and gray. Right? So that's the difference. So the best way it happens is like we've been saying, right? You're in a consolidation period, a pullback, right? Or seasonally just a tough period. You stay patient, right? And you let the action come to you, right? If Texas Instruments is going to get lit up with sweeper activity, you're not going to miss it, right? And even if you do miss it, you know I'm going to put it on the top bet list for that day, right? And as you see those names hit the top bet list, that's our confirmation that there's a big move in play. Right? Without that, again, we go back to no edge and trying to predict what's going to happen. All right? So the best way is to let the action come to us to confirm that it's in play. Because look how long, right? I mean, listen, it shows you how clueless I am. I'm the first to admit it. I thought we were going to see rotation into Texas Instruments. You know how many times I've been saying, maybe they rotated to Texas Instruments. Maybe they rotated to these names. Look at that. Look at this. Okay, look at this. So now you could be sitting here with a position, and God only knows how far out you went, but you'd still be underwater, right? Especially if we're playing calls, and sitting in this chop. Where instead you see some flow, even if you start to see a little bit of activity starting to heat up in it, if you want to be early, it's better than waiting around for it. Okay? But, and these consolidation periods are normal, right? Are normal. Like after these consolidation periods, usually when they come to an end, you get that extended move. Right? And it's not going to be just Texas Instruments. It's going to be a lot of other names that go along for the ride. And there's drifts and drabs of it, right? Like this one's been heating up, Western Digital. Again, I say heating up, meaning that, it's started to move the last couple of days. But like, look how long this thing has been out of favor. Right? It's a long time. And this is the thing, guys, too, right? That's the problem with waiting around for the flow. You can wait around for the flow and it never shows up. But that's the beauty of it in the same token, right? That's the beauty of it. We all want to play, but we don't want to light our money on fire. Right? What the flow has been signaling to us, two things, okay? That this has not been at any point the characteristics of a new risk-on growth bull market. There have been no signs of that, right? Signs of that would be new leaders, new names, a top bet list littered with action, not the same names over and over and over again. All right? When you get impatient and you traded NVIDIA 4 times and now, the momentum has gone south and you got nothing else to play, that's not a bull market. Right? That's not a bull market. That's a trading market, right? So even the lack of flow is signaling to us what the environment, what the climate is more likely to be. And we try to make the best of that situation. What's a sweeper? That's a whole other webinar, but a sweeper is option flow. A sweeper is an aggressive call or put buyer in simple English. Okay? Sweepers are aggressive buyers and sellers. That's what they are. So what I do, like a lot of people, you probably read tape, they look at the price action. What I do is I key off the order flow in the options market. So I'm looking for aggressive buying in the options market as an idea generator and a momentum indicator. That's sweeper. So when you hear me say sweeper, that's what it means, an aggressive buyer in the options market. All right, so again, could go, and we said this when the market started to pull back, right? That was, we really don't know how this is going to shake out, right? We could see rotation. We could see right back to tech names again. They buy the dip instantly. That was a possibility, right? We could see a lack of buying like we're seeing now, right? Which tells us the consolidation has more to go. So there were a bunch of different ways this consolidation or pullback could have went, and the answers, we're still waiting for answers. We're still waiting for answers. All right, but you don't want that to you don't want to walk away from the game thinking there's nothing going on, especially in a pullback because of it, because that's when you miss things. You want to be, if you want to be early, you want to pick up on these signs as they're happening early on, right? And that's how you can be early. Otherwise, it's hard to just walk in 2 weeks from now and hope to pick up on something and time it that well where you just walk in, right? It's not realistic. So this basically is just telling us, right? The tech unwind obviously could go further. There's no doubt about it. And that doesn't mean they have to crash. Okay? We talked about this numerous times. Okay? You could see a name like this, okay, go into something like this again. That would be totally normal after the move we just witnessed. Oh, what'd I do? Right? That would be totally normal. Now, again, you can trade, right? You can find trades in this, but you can't approach it the same way you would approach this. And that's what a lot of, especially newer traders do. They're going to approach it the same way, right? Thinking whatever entry they find, they can hold it and just make money whenever. So I think these names, again, for what we're seeing, especially flow-wise, these names, they're going to be tough. They're going to be tough. They're going to be quick. On an intraday level, you could definitely trade these names. Right? You stick to your stop, do all that corny stuff. That's very important. Okay, but the easy money has been made in these things. The easy money has been made in these things. Now what's likely to happen is at the least, they should take a rest. At the least. All right? Where the easier money is going to be elsewhere. Once the buying picks up, it's going to be elsewhere. Especially if it shows up in newer names. especially if it shows up in, like we talked about, names that profitable names, growing profits. Right? The stock's been dead, and now money has found it. Right? There are no sellers in those names. Right now you have sellers in these names, and it's going to make it tricky. Like, look for this, for example. I was talking to like Ranchero and Lucci earlier, right? Like, Tesla was a nice intraday trade today, if you were looking to trade it. Right? There was some nice momentum there, obviously, that you could have gotten in the middle of, even if, I'm not even talking about catching the whole move. A piece of this move. Okay? But, like, what changed today in Tesla here? Right? Because of what happened today, does that mean this thing can't be lower by next week? I mean, look, right? All it did was trade within this little range it's been in the last few days. And, that's where a lot of players are going to get thrown for a loop. Right? They're going to short lows, they're going to buy highs, and stock really hasn't done much, but they're still, especially in options, they're going to get destroyed. They're going to get destroyed. But on intraday time frames, these moves should be decent enough that if you catch them at certain entries, they're worth your while. All right? But I would, again, sticking to weakness, I would try to buy them off weakness. Or you can just do this, right? Like all the geniuses that entered the market who've been trading for 2 years thought all you got to do is build positions in AMC and hold it, and you make money, and they're getting destroyed. Meanwhile, put sweepers have been annihilating this thing for I don't know how long now. They just did put sweepers the biggest favor in the world because of that conversion. They reverse split the stock, and they made this thing a $20 stock for put sweepers to come in and buy $5 puts on them. All right? So now the thing's down from 30 to 8 in a week. But this is good. This is all good. Okay? This is all good. When this is happening, this is when you shit your pants, excuse my French. This is when you poop your bloomers, because this is not good. What's going on here is a beautiful thing. Okay? There's trouble in the not too distant future when you see that. Everybody, diehard AMC fans, like they're a baseball team or something. All right? They got a favorite stock. That's a disaster waiting to happen every time you see that. So, obviously, this is all good. And think about all the Kathy names. I remember, and it feels like yesterday, but you're talking about months now, right? If not a year. We talk about that hockey stick pattern, right? That's the likely, we talk about it still to this day, continuously. But we said, traditionally, right, all these high flyers, when the bubble bursts, what happens? They fall, okay? And they end up looking like hockey sticks, right? They come down and the bottom of the blade, the hockey stick. And you look at any high flyer you can think of, the majority of them, they all look like that, right? They all are in that hockey stick pattern. Look at it. Whoop, tick. Okay? Now, again, that could be good and bad, right? Down here, again, these things could be traded. But the last thing you want to do is think, snap, came down so much, that's it. The correction's over, snap is going to go back to being the beloved snap that took it to $80. There is nothing but underwater positions, underwater sellers in this hockey stick. That's why it looks like that. They sell every rally. They look for every rally to get out. Okay? But in here, if you want to be more tactical, right? Meaning in English, short-term trades, you can find trades, but you just can't get greedy. And, a lot of you know that too, whether it's from, experimenting with these things already or just by looking at them. that they're trades, but once you get greedy, that's where you give it all back. But again, when a new bull market shows up, this is not the stuff. This is the stuff that is forgotten. You forget about this. For even the ones that come back from the dead, you forgot they're even around. Like I remember AMD, when it went dead after a bull run, went into hockey stick formation. When AMD finally started to get some mojo back, years later, I forgot it was around. You know, that's how long it was dead for. Or Micron. It happens even to the names that come back. But a lot less come back. Few of them come back. The majority of them are dead. Dead. So, on that point, right, like I'll give you an example. Like a name like this, okay, perfect example, hockey stick. It's seeing some action recently, okay? So approach you want to take you want to try to trade, even if you're actively trading it, even if you're not holding a position in it, right? Instead of holding a position, you get a pullback, you see some action, you try to trade it, whatever approach you may be. But these are not the names you want to see show up on the top bet list. You don't want to, for a bull market I'm talking about, for signs of a bull market. These are not the names. But this name is catching action. Right? It's been moving the last few days. There's been some decent momentum there. Could it get up to $80? I mean, that wouldn't change anything. That wouldn't change a thing here. It sure can. But there's a lot more risk in these things. Right? Whereas, some of the others, again, and it's not new leadership, but when they start moving, even the energy names, you see, once they get a little momentum, they act better. These things are tough. BETR, Drew, I don't even know what those things are. They probably don't even trade options. Oh, no. Forget it. Are you kidding? These things are, you light your money on fire with these things. There's no easy money out there in these hidden gems. There's no such thing. What is this anyway? What is this, a SPAC? This is not even a stock. Drew, what is this? I don't even know what these things are. Maybe a SPAC, right? Oh my God. These are pump and dumps, right? It's like the mobsters used to pump these up, build a position in them, pump them, and sell it to everybody, and then this happens. What is this? What the hell happened here? Oh yeah, Drew, forget it. You honestly, and a lot of people, you look at this and you see opportunity. It's not even worth it. Because you can get destroyed in these things. You could go out to lunch one day, come back, and you have nothing left. Don't even waste your time with these. Listen, whether you're trading or investing in this game, okay, especially investing, there's no rocket science, right? You want to, for building position and even investing purposes, you try to buy names, especially off pullbacks, right? Not when everybody's in them, that have fundamentals. There are numbers there. Or there's growth there. There's some realness there. Right? The longer you are expecting to hold on to something, the more you want fundamentals there. Because these things, I'm not even going to say lotto tickets. They're even worse than lotto tickets. Yeah, Drew, we've seen a lot of this. This has calmed down. It's still out there, as you're showing me right now, but it has slowed down dramatically. I tell you, in 2021, it was getting scary. Towards the mid to late 2021, my bunker was already heated. I had 1 foot in. It was, you know what I mean? Because you knew You saw GameStop, AMC, the Kathy names. There was so much Bitcoin, NFTs, so many different things that it was a bubble. It was a bubble. But a lot of that stuff has blown up. A lot of it. You know? And that's the thing. You hit the nail on the head, right? The Fed was printing money, liquidity all over the place. Money was just looking for a home anywhere it could possibly find. You know, anywhere you could possibly find. Now it's a different story. Now it's a different story. What else did I have to show you today? So again, we are still, and this is more because of the flow than anything else, right? Our credit signals aren't telling us there's anything to worry about. Okay, we'll see if that ever changes in September. But the flow is telling us that there's nothing really to get excited about. I think that's the best way to explain to you guys how I feel about just the market and names in general. There's nothing I'm excited about. You know, there's nothing I'm excited about. That's the problem. You know, and when you're in that type of environment, I told you guys, right? So here we were joking about it. You almost, it's like the best you can do is treat this game like a DraftKings account. God honest truth. Okay? You think what you're doing, everybody and their mother's not doing? You don't think everybody's trying to trade Tesla intraday or trying to buy the dip on it? And, you know, everybody's doing the same thing. Or trading the market intraday. You know, it's hard to have an edge when we're doing the same exact thing that everybody's doing. And it's just, you may have an edge, but it's going to be a small edge. And when you have that small of an edge, the more important thing is managing your risk, money management. That's the most important thing. Right? And your outlook should be, and just to keep the simple math, you trade 10 names, okay? And you have 6 winners, 4 losers. There's no one better than you who's doing that right now in these names, trading these things. There's no one better than you. All you got to do is make sure that if you have 6 winners, 4 losers on those trades, you're making money. Right? That's the most important thing. But I'm getting questions, Ranchero. What are sweepers? You want me to go there? You want me to go there right now? You know, so you gotta treat it like a DraftKings account, and that's fine. There's nothing wrong, especially for us degenerates who like the action. There's nothing wrong with that. I mean, that's actually honestly, that I look at that as a good thing if you're taking that approach while you're waiting for something to get excited about. Okay? Because if you're taking that approach, more than likely, you're not going to blow yourself up. Right? What are you going to do? Again, 10 stocks, what are you going to go? 4 and 6? And you lose a little bit of money? Yeah, right? You're not going to lose your house. You're not going to quit the game because of that. Right? But if you feel like you have a little bit of an edge, whatever it may be, and let's just talk about like sweeper activity, right? Let's just say you feel like these names, Tesla or the market, when the market sells off and you got, like we say, sentiment on your side, or you see some sweeper activity in Tesla, and that's what you're looking for, right? Or any of those names, you feel you have a little edge, right? That's what I mean by that. There's nothing wrong with that. I think just that simple approach. Waiting for selling, and then you see some sweeper activity, or you're using short-term sentiment as an edge for an entry. I have confidence you can hit 6 out of 10 trades. Again, just intraday trades I'm talking about here. But, what are you going to do? Again, 10 stocks, what are you going to go? 4 and 6? And you lose a little bit of money? Yeah, right? You're not going to lose your house. You're not going to quit the game because of that. that rant, basically what I'm telling you is that big picture wise, and I know a lot of you guys fall in this category, especially on this webinar, on the Thursday webinar. I wouldn't say your longer term, your approach, but some of you have things, you're not in front of the screen all day, right? You're not trading all day. You want to buy whatever it is, a Tesla or Nvidia, and you want to sell it a couple weeks, a month later at higher levels. Right? That's the majority of you probably fall around that camp. No matter when, what names or whatever it may be. And just right now, again, you come on this webinar, I share with you guys my interpretation of what I'm looking at, and I'm just being honest with you. I'm not excited, and what that means is sweepers aren't excited, right? The more aggressive money out there is not excited right now. Yet. I love weekly. That's like a license plate waiting to happen on a broken down, a Ferrari with three wheels. I love weeklies. Right? That's great. But yeah, no, all kidding aside, even weeklies, right? If you're trading intraday, like weeklies, there's nothing wrong with that, right? You're trading intraday, what's the difference? You're probably better off with weeklies, But as corny as it sounds, I'm being dead straight with you guys. Having an edge is one thing. It helps to have an edge. The edge is only going to get you above 50%. That's what the edge is going to get you when you're trading active like that. There's nothing out there any edge out there that's going to spit out entries or trades actively every day, and you're going to hit at a 75-80% clip. It just doesn't exist. Are you kidding me? I want that too. It doesn't exist. And the other thing too is when you trade actively like that, you gotta understand there are going to be stretches where you hit a few in a row, you feel like you're Nostradamus and you're the best trader on the face of the earth, and then a week or two after that, you're gonna go through a cold stretch where it feels like every move you make is the wrong move. But if you manage your risk properly, you're managing your bankroll properly, it'll even out. But the more active you are, the more trades you take, that's ultimately, you can't get around that. You can't get around that. But listen, there's no other way for a lot of us. We're degenerates. Right? We're going to have to do something. So you need to do something waiting for, as Drunken Miller says, that fat pitch. Right? Sometimes you wait around a long time for that fat pitch. So there's got to be something in your game that you do. Okay? Again, I'm not saying where it's a lost hope. You feel like net, when it's all said and done, you can make some money off of it. But the more important thing is you're not gonna take a hickey off it. Well, listen, intraday, right? And that's a great question for what Drew says. Nostradamus. That's a great question, Drew. That's a great question, okay? So, simply put, like for me on an intraday basis, okay? All sweepers to me all it is a momentum indicator for intraday purposes, right? The bet means nothing. I don't care if a guy puts $10 million behind a sweep, okay? If I'm just going to day trade it, that $10 million bet means nothing beyond that day for me, right? So all it means is sweepers tell me there's a higher probability of momentum coming into the name off that signal. That's all it means. So to answer your question, if the momentum doesn't show up, or like you're saying, the momentum is going in the other direction, I got to get the hell out. You understand? Because I'm wrong. There's no question about it. I'm wrong for what I'm looking for. And that's the most important part. You know, that's the most important part. And that's generally what I'm looking for of sweeper activity on an intraday time frame. You know? So no, I do not add ever intraday. The only time I like to add to positions, well, I just answered. The only time I like to add is if I'm building positions longer term. You understand? Example, somebody comes in and starts bombing Texas Instruments, March calls, let's say, for next year. What I'll do is maybe I'll buy some today, right? And then let's see, market's been shaky, we're in September, you know, let's see how the stock reacts over the next couple of days, right? Maybe it comes down, and maybe some more sweeper activity comes in, and I'll add to it. So that's when I'll add. You know, that's when I'll add. When I have time and I want to build a larger size position, but not intraday. Intraday is a whole different mindset. Yeah, do you hear? Well, no, you can't hear. This is nothing. You got to hear this dog snore when she's snoring. It's Ranchero. It can make you deaf in one ear. This dog can snore with the... I've never seen anything. You guys will never see anything like it. Like Plan and BHC. Look at Jonathan ripping two doozies out there. Exactly, Jonathan. Exactly. Exactly. And listen, you know, unfortunately, it's been a while, you know, especially for me. I've been gun shy for, you know, since, as you guys know, the winter of 2021, I haven't taken a full-size swing position in anything since then. You know, now again, there were opportunities to do it off the flow, but you know, it was in energy names or stuff like that. So I didn't have the conviction. You know what I mean? But when there's a lack of it, you know, the market, the overall market, the climate, the environment, it's not a bull market, right? What I've learned throughout my career is when we're in bull markets, I can make money. I can hang with the best of them, okay? We're in a bull market. But when things get a little frisky, right, in corrections or bear markets, I had a tendency to give it all back and then some. That was my big problem, my big hurdle to get over in my career. Okay? In bull markets, I had no problem. My biggest problem was selling too soon. That's everybody's problem. But other than that, I solved that problem, right? I had an idea generator or flow. I solved that. I had a solution for all that. My biggest problem is that all the money I would make in a bull market, when things went dormant or sour, by just almost like they're four straights, I guess you could say, right? When I'm not excited, I'm just playing shit because I want to play shit, and I had a tendency not only to give back everything I made in the bull market, and more. And I pulled my hair out of my head. There was nothing in life that annoyed me more than that. Okay? Nothing in life. All that work in the bull market, I gave it back for what reason? Right? While I was doing it, I knew that I shouldn't be doing it. So for me to continue to just keep doing that, you know, I got to be an ass, right? If it's important to me to make money in this game, that's my goal. Why would I continue to do the thing I know is getting in the way of me making money? All right? So, you know, and it's easy for me to say now at this point in my career, right? I've been in the game a while, a long time. You know, I'm more conservative too than a lot of you guys. But you have to figure out something to do. Again, like Drucker Miller said it best. While you're waiting for that fat pitch, There's no other way to put it. Right? You can't force a fat pitch. You can't put lipstick on the pig and make something out to be a fat pitch when it's not. Right, exactly. So all that stuff, right? Sizing down, less trades, all that stuff. And initially what's going to happen is, okay, you're going to make money in the bull market. Then when you start fine tuning, like we're talking about, you'll give less of it back, right? So you start to realize you're still giving back some of the money you made in the bull market, but it's not all of it. You know what I mean? And you start, every time you start to get a little more selective and fine tune it, you're giving less and less of it back, right? There's nothing wrong with giving money back. Right? Sometimes you can't help it. You get caught in a pullback, news, right? Anything can happen, and you're going to give some back. Okay. The whole key is that, like you guys said, you keep working at it till you give less and less and less back. So now, when you're in a legitimate bull market and you have those fat pitches and the conviction, all right, you make the money and you're keeping the most of it. You're keeping the bulk of it. Yeah, and that's we complain about the sweeper activity. All that. What do you think people are doing, right? They get paid to chill, or even like Ranchero is saying stuff. Again, I don't want to get into logistics here because it's a Thursday webinar and not many people are too familiar with that stuff. But what the larger players do, that's what there are other things that they do while waiting for that, right? They option strategies where they're collecting premium and stuff like that, right? Instead of buying, they're selling premium. Okay? So again, everybody's different. You figure out stuff you need to do, but listen, you got to realize that no matter what you figure out, no matter what it is you figure out to do in that time, okay, you're not going to find something that's going to replicate and be equal to your success in a bull market. Okay? It's not going to happen. And if you think you do, if you think you found one, you're wrong because you have to take more risk. And if you get caught with that more risk, it's going to cost you more money, right? So you just, in a nutshell, if you become more conservative when there is nothing to get excited about. And then when there are things to get excited about, and they come in waves, right? It's even in bull markets, it's not the whole entire bull market, right? Sometimes you're gonna wait for little pullbacks in bull markets. But yeah, for the stuff we look at, flow-wise especially, like in a bull market, you're not short on ideas. Until the end of the bull market. You're not short on ideas. There's always new setups, new names, right? Then you get a little pullback, a little reset, right? To set up, again, new ideas and new names. So there's no shortage of it. In bull markets, the spells like we're going through right now are short-lived. And then, it leads to excitement. But you gotta understand, now we're in a weird time. We're in a different time now, right? We're in a different time, and that's why it's hard to label this, whatever we're in, a new bull market, right? If you look at statistics, you can turn it into a new bull market. I get it, but you have the Fed against you. You have the economy slowing, right? Where's the growth? You know what I mean? Where's the growth coming from? The cyclicals, that's why nobody wants them. There's no growth there. Tech, AI, right? Maybe, we'll see. But like I said, if we're going to see tech or AI, artificial intelligence, be the new leadership, which is certainly a possibility, a lot of people think it, we are going to see new names that participate in it. It's not just going to be own NVIDIA for the new bull market in AI. It's not going to happen. It's not going to happen. But listen, in the meantime, right, again, we don't want to get caught up on that because you get stuck on that mind frame and it does more damage than good, okay? Here's what we got right now, right? Right now, let's deal with what we got with right now. Unless we see something crack in our big picture signals, the game plan right now is we got some selling, right? We're going to be pretty damn close to a squeeze setup here already, short-term squeeze, right? So right now, we're already on watch as far as flow is concerned, the sweeper activity and stuff like that, for a setup for a snapback rally. Okay? That's what we're dealing with right now. Let's play what's in front of us and not look too far ahead because, like I said, it could do more damage than good. All right, so that's where we're at right now. We, coming into today already, we were close. We'll see. The Dow finished up today, right? Look at this. This is all Apple. BBAI. Oh wait, I know what that is. Is that the Black Bear AI? Yeah, but you see, like again, I'm not knocking you. I have no idea what this stock is or whatever, right? But this is not what a new leaders look like. You understand? Like now, again, very easily this thing can announce an AI deal with Nvidia tomorrow and rippity doo dah like this. Very possible. I have no clue, so I'm not saying that. But I'm talking about new leadership. Right? It doesn't have this look to it. It doesn't have this look to it. It doesn't. I try to put it in words. You guys seen coming out of COVID what the new leadership looked like. You remember all the names? Like, I don't know about you guys. A lot of those names I didn't even know existed, let alone was watching them prior. Think about what happened coming out of COVID, right? You had the whole stay-at-home, software, all that leadership, right? You had Shop, Zoom, Peloton, Fastly, MDB. I mean, you name it, right? How many stocks? All the hockey sticks. Exactly. Think about all those hockey sticks. Okay? For a good, year and a half, 2 years, it felt like every single day, every week, there were new names setting up to break out and catching sweeper activity. Right? And this wasn't when the market looked bullish. This is as the market was still dealing with COVID. New York was on lockdown, and we all thought we were going to turn into zombies. Right? So it wasn't like some exuberant GameStop ANC shit. There was new leaders being born out of that COVID crash. That's what and you look at, not all of them were profitable, but a lot of them were profitable, but all of them were looking for explosive growth, right? They're looking for year over year, 300, 500% growth year over year. Ridiculous. That's why those stocks exploded, based off future growth, right? And like, if you missed Zoom or you missed Twilio, it wasn't like you missed those two names. Now you gotta chase them higher because that's it. There are no more. There were 20 more in the pipe coming out, right behind it, right? Like we talk about this name. Okay, this has the new leadership look to it. Okay, this is what new leaders look like. Oh, what I just hit. Okay, this. But like we were saying, we talk about this stock constantly because it's like the only one. Right? It's the only one. Coming out of the COVID crash, they were a dime a dozen. A dime a dozen. And they don't, listen, it doesn't have to be high growth. It doesn't have to be high growth. It could be a bull market in small caps. And even though the NASDAQ's not doing much, you have the Russell outperforming. Like I told you guys what happened post 2000 with me. That were my best years of my career. But they were all small cap names, right? That were all fundamentally sound, different sectors, and they all had that healthy look to them. What we're seeing now is nothing like that, okay? What we're seeing now is almost like hot potato until something blows up. That's what it resembles, okay? Buy the industrials for 3 months. Okay, rotate out of the industrials, buy tech for 3 months. Okay, rotate out of tech, buy energy for 3 months. You understand? They keep, and what they're buying, they're not buying new names, they're buying the largest names, the safest names. You understand? Like this is almost like a rotating range-bound market. That's what it is. But it's something new that we really I haven't experienced because I never had the Fed against us, rigging the game to the downside as aggressively as they did in 2022. That was a new wrinkle. Everybody, including myself, thought it could only end up the same way, and that's not good. But that hasn't been the case yet. But that's the feel I got. It's like almost they're playing hot potato, trying to avoid getting caught in something breaking. You know, but it's a dangerous game. Like, look, it's easier to be that Monday morning quarterback and make it sound easy. Okay? But we talked about it on this webinar. When the market bottomed in October, what everybody thought was going to take the leadership role off the October lows, the complete opposite happened. Everybody thought the financials, because rates were going to remain higher for longer, were the best place you could have your money off the October bottom. Whatever you do, they told us, do not think about buying tech. Ever. Right? And that looked right for 2 months after the October lows. But if you didn't get out and you held the financials, God, depending on what you own, you'd be talking to yourself. And then come January, tech started to outperform. Right? And then when SIVB went under, because the Fed had to inject liquidity into the system again, you had tech caught a rocket up its ass. You know, but you see what's going on, the moving around and stuff. It's rotation. It's rotation. ESTC, I saw they had a good quarter, right? This was a good stock back in the day, too. Yep, I mean, you know, it's got a lot of work to do. But it's been hot recently. Yeah, I remember this name. I traded this name. Catching some action from time to time, too. Somebody said VRT. That was another one that had, oh, the sun's going right in my eyes. See, look at that. All right? There are no sellers. There are no sellers. No sellers. And the thing is, too, I'm not just saying just look for hidden gems. I like that. A lot of us like that, right? We like to look for not even small cap, but mid cap, growth type names. You know, that's the sexy part of stock picking. But you know, the large names do well. As you know, obviously, off the COVID rally, wasn't just these names that were doing well. The Apples do well. I remember the first couple names I bought off the COVID lows wasn't, unfortunately, it was the wrong thing to do, but I didn't buy Twilio or Zoom. I had McDonald's and Boeing and Trip. That's where like the largest buying was in. But it's just the risk appetite. That's what it is. You see, there's risk appetite, right? You see the excitement from buyers, and it shows up in names, and it doesn't show up in Tesla weeklies, and that's it. You understand? When you're seeing like we're seeing now, the market bounces, and all they're buying are Tesla weeklies. Or even those names in general now, they're so damn crowded. IoT, that's another high growth name, right? Yeah, look at that. I had a nice move here recently. Where's yeah. This is not around that long, right? It came public in 2022? Yeah. This looks interesting. IoT. I remember a couple of you guys were talking about this name. I remember this name, IoT. Annette? Yeah, I remember you were looking. Annette's still looking good? Let's see. Yeah, look at it. That's it. This pullback obviously is not affecting any of these good names. Let's see, Splunk. What's you looking like? Splunk? Yeah, but you'll get a dip. You'll get a dip. See some of these soft MDB, that's another beast, but I think that dipped recently. Best speculative names, look at CAMT. All right, let's see. You're talking my game now. See, I like this. Oh, yeah. I know this one. CAMT. They're profitable too, right? Yep. CAMT. What were the other ones? The sun is right in my eyes. I can't, MTSI. Oh, that's a semiconductor, right? I know this one too. MTSI. Now, these are, smaller companies or no? On to. This one looks familiar too. Oh no, maybe I'm thinking of. Yeah, those are nice looking stocks right there. They're small cap, Edwin. They're considered small cap. Yeah, but I like them. Now I know MTSI. I know I traded before. Trades options, definitely. I remember making money with this name back in the day. I think it's a semiconductor. This thing, I think we just saw a sweeper activity in. Am I wrong? Anybody remember? CAMT? I could be wrong. But yeah, Edwin, they look good, these names. I mean, they've had nice runs here recently. They could use a little breather, but they look good. We did see, right, in this name? And this is this AI you said or no? CAMT. Look at this thing, huh? Yeah, huh? Ooh. Look at that. Nothing, you know what I mean? When buyers step into the, who's selling this? Right? That's where you get these moves like this. They look good, Edwin. They look good. APPF. This I never heard of. APPF. Appfolio and property management. AI for property management. This doesn't trade options, does it? APPF? Or maybe it does, but really thin. I never seen this one. It's a good looking stock though. This is Israeli? It trades options? I never seen this Appfolio. Yeah. I mean, I hope some of these names catch action. These are the names I like, Edwin. Exactly my speed, you know? Like I know Horizon saying we saw some sweeper activity in the CAMT. This got a little hot here, a little too hot here. This went from 20 to 60. Oh, CAMT is Israeli. Yeah, IONQ, that too. But that's in breather mode right now, right? Needs a little breather. Oh, what about this name? I keep seeing the CEO buy stock. Remember this AAOI? Yeah, Edwin, we definitely speak the same language. Definitely. Anybody familiar with this AAOI? I mean, I know the stock. It's been around forever. What What has piqued my interest a little bit, there was it looked real buying, like they're instead of speculative buying, it seemed deep in the money call buying. So somebody has been taking a position in the name, and the CEO is buying at the same time. He just bought yesterday again. Now again, this has been around a while. This stock, look at it. But you got the CEO buying here. I see some of you guys talking about the bigger names. Yeah, Caterpillar. I mean, listen, Caterpillar caught some real nice action. I think it was right here, November's. So now you got a little breather here. If you missed that, all right. So it's right around where they were buying the stock, the calls, I should say. For those in Caterpillar or looking at Caterpillar, this right here off the action was a much better entry. You know, you had this breather, which was nice. But yeah, Caterpillar, one of the few names. A whopping 74 grand or 74,000 shares. $74 grand, or are you being sarcastic? Oh, gee, that's it? That's all it was? Wait a second. Could that be? Maybe. I didn't even actually look at it recently. Hold on. I'll tell you right now. I have it here. Because it was just yesterday, I think. Let me see. AAOI. No, 600. Oh, those are options exercised? Wait, is that the same person? Yeah, this is the same person. Oh, those are options exercised, it says here. Yeah, so that's not much of any crazy buying there. A lot of insider selling popping up in these things. Yeah, I see that now, Ranchero. I didn't see that. I see that now. So that's Caterpillar. What are the names? What's been the best action that we've talked about? Not that many, so we can remember it. The energy names we know. By the way, all the energy names look good today. You see them? MPC. I think a couple of you bought the PSX. That's been looking good. Even Slowpoke PBF. Starting to move out of this. They bombed this guy. But those are the three. MPC, PBF, and PSX of recent that they bombed. What else? Outside of that, let me think. Zoom we spoke about. Caterpillar. What else? Anybody else? Yeah, did you see that? I tried to day trade that today. Didn't really do too much. And why a short-dated risk reversal? Watch them catch news. No, wait, it wasn't this. It was this today. Urban. This. So today, this is what they put on today. Even the risk reversals, for Christ's sake. For September? Like, come on. Here, they sold the 31 puts to help finance the 33 calls. So net debit cost them about 80 grand. You know, decent size, but September's. I wonder what what this guy has up his sleeve here. Watch him catch news. I'll punch him right in the jaw. What about Google? The problem with these names, here's what's going on in all those names. Every single one of them, even the ones you didn't mention. Okay? The amount of buying that came in post SIVB, okay? So the amount of action that these names were catching, this whole move, right? All that buying doesn't disappear, okay? They rolled as the stock goes higher, they roll, they hang on to some of it. So now the stocks have come in, right? So now they do the opposite. Now they roll down strikes, right? Because they don't want to be too far out of the money. So if the stock bounces, they got a higher delta position. You understand? They get a bigger bang for their buck. Okay? So now you have all this size that came into these names. Like, you guys know who were watching the flow. They annihilated these things. Millions and millions of dollars. Okay? So now you have these big sweeps that come in that are rolling down strikes. Now, this is not new betting. This is not fresh money coming in. They're just adjusting their positions. So that's the problem with these things. You understand? You can't treat it like it's new betting. What you really need to happen, and it's more time than anything else, is you need these things to quiet down. You know, you need the action to quiet down. You need the rolling to quiet down. So now they go into, like I gave you Apple, for example, or even Tesla, right? You see this? Well, no, that's a bad example because that didn't have a run prior. That's why it was so good. Okay? So now if you go into something like this, like we said, okay, and then you see buying show up, right? After it goes quiet for a little bit, the rolling stops, and now you see size sweepers, real buying, like we've been seeing, come in. Now you can say, all right, listen, this could be new positioning coming in. You understand? The rolling has died down, all the hype, all the chasing, all that shit has died down. It's consolidated, and now this is fresh money coming in. You know, otherwise, you're always going to see buying come into these names right now. Right? We always see it. At the same time, we're seeing put buying. Right? So what are you going to do? We just saw size put buyers in Apple over the last few days. Right? What do you just ignore them and just pay attention to the call buying because you're bullish? You know what I mean? And that's why, you know, and we were talking about this as they went up. Like, you remember, like, on the way up here, the same thing. Okay, this is not new buying coming in, but the momentum was so strong. There was no put buying that every little dip, when sweepers would show up, those dips were supported. You understand? There was no bearish momentum. Now, what you'll have is, like, for example, today, okay, Tesla, as the market bounced, was seeing call sweeper activity come in. Right? Now, you can day trade it. That's fine off the activity. Play the momentum. But the problem is be prepared, because if that momentum runs out, it didn't today, but if that thing goes quiet and put sweepers come in, I mean, it's the same thing in the other direction. You understand? Especially when they're playing weeklies, guys. I mean, they're playing tomorrow expiration. You think they're holding that thing for longer than 10 minutes? Ask Ronchero. He was trading Tesla today. Ask him how long he held it. Right? So, again, for the flow, that's the problem with trying to get an edge off the flow in those names. There's not much of an edge outside of intraday momentum purposes. Because of this. Because of how strong the buying and the move was here. It got littered with call buying. Right? And think about it, all that call buying, it doesn't disappear once the stock just stops going higher for a couple of weeks. People are still bullish. So that's the problem there. You know, that's why it's always best, right, for sweeper activity in general, in regards to the flow. Always best when it comes out of a consolidation and you start to see sweepers show up, you know, or a name that hasn't caught flow and is pulling back and they start to build a position. Right? Because that can only mean one thing. Here, we don't know what the hell's going on. You know, even the puts, right? Even the puts. How do we know that the put buying is not all these bulls that we're buying and want to hold on? Right? All the bulls that participate in this run, now this happens. What do you think they're going to do? They're not going to buy some protection if they're deciding to hold it? With this China news especially? You could go to sleep tonight, China bans iPhones, or a rumor of it, and forget it. Right? So that could be the put buy. That's the problem. And I know you guys, some of you anyway, you love to trade these names, and it would be ideal for you to have an edge constantly in these names, off the flow. But it doesn't work like that. I'm sorry, you know? I'm not going to lie to you and tell you it works like that. You could still use it for scalping intraday off the momentum, without a doubt. You know, you want to pick your spots, obviously. You know, you kind of, what you would be looking for swing trades in these names, all you do is, now it's confined intraday. So the same thing, consolidation and weakness, right? If Tesla's down, and you see a wave of call sweeper activity come in, right? You like it for a scalp, for a bounce, that would be ideal, right? If the stock is dead, going sideways all day, or pulling back, that was already running, and you've been seeing call buying, and then all of a sudden after the 20th sweep, you say, oh, this one I'm going to tail. And obviously, you know, you don't have any edge doing it that way. But, you know, these are, like I said, maybe you don't like me for saying it, but that's the way I look at these things right now. You got to look at it like a DraftKings account, right? You still might have an edge. Like, I really, truly believe you have an edge doing exactly what I said, if you're a little selective with your spots. But, you know, it's not the same edge as a fat pitch edge. Like if they were buying it, fresh buying, off a great setup. You know, because the problem is intraday. Tesla's a good example today, okay? If the market or Apple starts to roll over, okay, there's a good chance no matter how bullish Tesla is or no matter how many call sweeps it's catching, that the weakness will likely carry over into Tesla and take it down. And the momentum shifts. And those weekly call sweepers turn into weekly put sweepers before you even blink. But, you know, and that's not just slow. That's anything you're trading off of intraday, guys. It's, you know. But the way I look at it, these names especially, everybody's playing them. Like, think about the competition you have in these names. Right? Every top-notch trader. Everybody's trading these things. Everybody. So what's that mean? That means the market makers, there's more shenanigans, they have more traps set, right? There are more fake outs, there are more of everything that you don't want. I mean, that's the way I look at it. I don't know. Where, again, on just intraday I'm talking about, where like a Zoom, okay, where nobody's interested in Zoom right now, right? Everybody at this point hates Zoom, okay? And not today. Today it caught some action, but not like the other day. When was that? I think it was, let me see. I think it was this day, okay? I think it was this day. Whatever. You get the point anyway. They come in and they just start tattooing Zoom. Boom, 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 boom. Once we get like out of nowhere. I'd rather try to get in the middle and scalp that intraday. Nobody is playing that. And it's rare, Zoom, right now the way it is, that all that call sweeper activity is going to come in and then it'll flip like that to put sweepers. That's not going to happen. Maybe after it moves, but who cares? By that point, I'm out of it. But you see the difference I'm trying to explain to you? Now, again, there hasn't been a lot of it. That's the problem, right? There hasn't been a lot of it. Zoom, I'm trying to think of a Caterpillar had that one day last week. Like, what's another name? You guys have a better memory than me at this point. For those of you in the room or on watch world, what's another name they tattooed that's not the Magnificent Seven? We talked about the energy names. What, any other name, even if it was Intel? Right? Intel for what? 4 straight days now? Since that DB conference. I mean, this might not look like much, but like Ranchero and I were talking about, this is a parabolic move for Intel right here. No? So, like, I'm just being honest with you guys. An edge of sweeper activity, you got a better, sharper edge in names that not everybody and their mother is trying to trade intraday. And, that keeps me out of trouble too, because if when they're not bombing anything, like, the majority of my winners come off them bombing something. Very rarely do I play something that they're not bombing that sees a little flow. Sometimes I get lucky and they move, but for the most time it ends up a scratch trade. For the most part. But not all of them move, even if they get bombed. Like I played this yesterday, right? This was spec action. Here's one, I forgot about this one. WW. Right? Who's trading this? Right? Besides sweepers and me, and then eventually, after it gets bombed, everybody else who's seeing the flow. Who's trading this? Yeah, Disney, there was some action late today, right? And that too, I traded that, I didn't trade it today. I traded it, I had a little move today too, I think, right? I traded Disney, when was it, Sahil? They played, I think it was weeklies, maybe last week. And then it actually, by the end of the day, I think it gave all the gains up. But I think they were playing weeklies. I thought it moved more than this. It didn't even really move, so I didn't miss anything there. But yeah, there was some action in the afternoon. But yeah, you're right, Sahil. Something like this, right? And again, it's got nothing to do with winning and losing. Okay, I'm talking about edge, right? The definition of an edge in this game is that over time you will find consistency of more winning than losing, right? The best setup, the best action could go down at any point in time. That's life. That's the game, whether you like it or not. There's no such thing as a lock. We understand that. Okay? But in regards to an edge, okay, you have an edge where or sweeper activity where nobody's looking, nobody's playing, nobody's participating, and sweepers come in firing rapid fire. That's the edge of day trading or sweeper activity. That's the edge. Right? The further you get away from that edge, the less and less edge you have. So that's what I'm saying, like a Tesla, okay? It's got nothing to do with the movement on the intraday time frame, okay? As far as an edge, you have an edge off the sweeper activity on the long side when nobody's playing the long side. Right? The stock is dead. The stock is quiet. Nothing's going on. You guys remember AMD had won that one day, which was incredible. I think it was AI News or some shit. Say here, you remember. It was incredible. Or Microsoft had a couple days like that, right? Like those type of days. Where was the AMD? Here. This day, right here. I remember it like it was yesterday, right here. Okay? Stock was down post earnings, I think a day or two later off of earnings. Okay? Everybody was probably looking to the downside on the stock for good reason. All of a sudden, out of nowhere, I sure didn't expect it. I don't think anybody did. All of a sudden, sweeps, bing, 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 start flying in. Okay? No idea as the sweeps are going off what the hell's going on. Sweepers did. Right? Like, there's the edge. Okay? By time everybody figured out what the hell was going on, there was some nonsense, supposedly bullshit news, AI news from AMD. People were calling it fake news when it was all said and done. But the stock ripped from being down to being up bright green. And not only that, it marked the bottom in the name, period, off this pullback. You know? So that's, again, not because it worked out. That setup with the sweeper, that's the edge there. That was the edge that we had. That was the edge. Nobody was in the name actively playing. No traps were set. Nothing. If anything, traps were set to the downside more than the upside. This name was just out of favor, and then earnings was a bad reaction. And then, it just came out of nowhere. You couldn't predict it. So anyway, the point of the story is that's the problem right now with the larger names. You got to really pick your spots, and you want that sort of setup for an edge there. For overnight holds for a swing trade, there's no edge. Like I don't know. For me to admit there's an edge in these names or flow, I would need to see nuclear annihilation by a buyer. Like somebody come in and just open up 3 different lines and tattoo shit. For me to say, oh, whoa, this can't be. This is not rolling. This fund is just going bananas here, But otherwise, there's too many people in the stock. In these stocks, there's too many people. That's the problem. Everybody, too many eyeballs on them, right? Everybody I know wants to play these things. Everybody. I don't know anybody who's not playing them. How about that? Right? Everybody talking about them. Yeah, really crowded there. Really crowded. Honestly, I think that's the only problem with the market right now. God honest truth. I think right now, okay, just right now with everything, the information we know, the only problem is that these names are crowded. Other than that, I don't think there's a big issue here. I really don't. Yeah, and that's what they become. You're right, right? These names they trade them like they trade these zero expiration S&P 500 calls. They trade Tesla, Apple. You know what I mean? These are vehicles for, like you said, these programs and algos. They're not human beings trading these things. So, and like Tesla, this setup, I was thinking about it today as it's moving. You know, you want to hold it, right? Because you see it's acting nice with the rest of them in the afternoon. You know, it looked like the momentum shifted, but look at this. Yeah, nothing changed. You know, nothing really changed here yet. It gets frustrating when you try to hold overnight. I agree, you know. But yeah, no, the thing is, you raise a good point. We're getting to a point where, for like snapback squeeze wise, where you can roll the dice and look to hold. Well, we're pretty close. We'll see where things lay tomorrow. Um, wait, what? Wait a second. That's not right. What's going on? Futures just open, is that right? That can't be right. No. What the hell's going on here? What is this? Up 51. What is that? Off the lows today? The move? What's trading you trying to do there? But yeah, so we're not too far away. Hey, listen, into any selling, right? Into any sell-off, um, into any sell-off, we should be looking squeeze anyway. You know, you don't want to jump in. For example, if put sweepers have the ball and they're bombing away, you don't want to get in the middle of that. But once you see put sweepers dry up and you see some call buying, we should look squeeze now anyway. Because like CEO was saying, you got hedge funds who just took the dive short. You got short-term sentiment that's, if not, it's favorable at the least. So we should be looking for snapback squeezes anyway. But again, snapback squeeze. Like this squeeze, honestly, I thought we got even more than I was expecting. I didn't think we were going to get this much that quick. And it's nothing drastic either. But, snapback squeeze. Yeah, over here somewhere. I mean, that's not, what was it, 50 handles? I mean, is that worth holding overnight right now? I don't know. This Apple stuff is a little shady. You get some negative news out of there. Is that legit news? Anybody know? What is it, just rumors about Apple? Oh, you guys show it too? Yeah, look at this. It's up 51. IBM, let's see. IBM, yeah. I mean, it looks good. Look at this consolidation. I mean, I don't know. It's IBM, but it looks good. I don't know. That's the stuff with China. You don't know what to believe. You know what I mean? And they shoot and ask questions last because you're looking for an excuse for some profit taking in Apple, right? I mean, it's had this ridiculous move, and what did it do? It didn't do any. It had 2 bad days, but it's back down to the bottom of that range there. It's not like this thing is falling out of bed. Look at this run. Like, this is Apple. That was crazy. This was even crazier. It was longer, though. China hasn't confirmed it yet? Oh, a leak, huh? Yeah, you don't know what to believe, right? Could be nonsense. How about that? Complete nonsense. By the way, you want to talk about wild? And I'll let you guys run. You guys see Meta intraday today? What was that? Like, this is the stuff I'm talking about, too. Okay? 5 minutes doesn't even do, well, 5 minutes does it justice. Look at this, ready? Okay? Oh, Meta! Oh, look, Meta's strong this morning. Apple's down, Nasdaq's down, Meta's up. I'm buying Meta. I'm chasing Meta. I told you, Meta. Boop. Look at that. What is that? What happened there? Was there news? Stop hunt, huh? Look at that. This is exactly what I'm talking about. This. Now this is what I'm talking about. Stop hunt. That's psychotic. And then it bounced, right? And then look. Where did it end up today? Oh, right here, halfway. They met them halfway. Yeah. But, and honestly, like what I'm trying to say, probably it's nothing important either. It's just shenanigans. Shenanigans. Now, stop hunt, right? Where are they looking for? What kind of name are they looking for stop hunts? Crowded names, right? You don't look for stop hunts in not crowded names. Yeah, they could. Exactly, Drew. They can do that with any stock, but they're going to do it in the crowded names, right? You're not going to do a stop hunt on a stock that doesn't have stops. That's the risk when you're dealing with this crowded stuff. You got to pay attention. You got to make sure you're aware of what's going on here. You leave to go to the bathroom, you come back, you're like, what the fuck is happening here? Jesus. Yeah, right? Look at this. I turn on TradingView, the futures are ripping. They'll have you buy everything thinking, DraftKings, yeah. It had a little bit of action yesterday, but cheap spec action. Nothing, I wish it would have caught it this morning. That's a nice move. Is that what it was? The football season? The reason for the rip? Kieran? Anyway, I'll leave you at this, right? McElliott, our quant guy from Nomura, here's his look on things, okay? He thinks that this has just been an Apple thing, and the likelihood is, aside from Apple, right? Aside from anything happening with Apple, probably we're in a spot here where nothing really is going to go on. VIX shouldn't get hot. There shouldn't be a bid there. But he's concerned about September expiration. Now, I understand his concern, but what I will say is that, you have some time until then, and as you can see, things can unwind pretty quickly. Hedge funds were just getting long names, now they're dipping in on the short side. So let's see how things shake out, how they stand going into Expo, and then we can reevaluate. Example, if the market does bounce, right, only needs a couple days of a snapback rally, and you wipe out some of that scarishness, you might have a problem come September expiration. So definitely something to be aware of, but let's, we'll deal with it as we get closer. We can get a better handle on it. Here's another, right? VIX, you see the reversal today. if you get some more selling of VIX going into September Expo, I think you might have a problem. You could have a problem. So, but on the flip side, Apple kind of confirms it or whatever, and you get a little bid in VIX and some more bearishness out there, we can possibly avoid, a short-term debacle, September Expo. Too many put buyers. Oh, for tomorrow weeklies. Yeah, no, tomorrow's not a month. I'm talking monthly Expo and monthly. September monthly Expo is what McElliott's talking about. He thinks up until then that there's no fireworks. Next Friday is quarterly. Yeah, he thinks there's kind of, I forgot the term he used, but, kind of a lull between now and September expiration where there shouldn't be anything too crazy going on. VIX Expo is next week, Wednesday? Is that next week? No, the following week, right? I don't know. I can't keep track of the time, the dates here. When is that? Wednesday of next week? Or is it the following? What's today's date? The 7th? It's next week already, isn't it? Yeah, wow, it's next week already? Jesus Christ. These weeks fly by, right? Yep. So we'll see. Yes, right now, it's the same game plan, right? We look for trades, whatever it is, whatever they're bombing, I'm going to try to day trade, make some shekels off of. And again, if they happen to start buying names and you like a name that's set up well, you have my blessing to fire. You got to be careful in the crowded stuff. That's all right now. Hopefully. And the other thing too, like we talked about the tech underbelly, there's so much outside of the Magnificent Seven tech, right? It's the FANG, the 7 names. There's so much tech out there. There's so much, so many other names that we could see buying in. It's just the large mega cap tech. That's the problem. What's the rationale behind things being boring until... So in other words, again, not to get into the logistics, because let me tell you something. You read who I mentioned, McElliott, you read his note. First of all, you got to read it 5 times before you comprehend anything. 5 times. Okay? You got to read the note 5 times before you understand anything in there, if you're not familiar with his lingo. But without getting too complicated, it's almost, in a sense, things are pinned because of option positioning. Things are pinned until expiration. And then so much comes off the books, so much positioning that's pinning these positions expire, it almost like it loosens things up. Yeah, well, that's what I didn't want to go into the gamma, Vanna, charm stuff, because again, people's heads will spin. But that's the rationale. That's all that fancy talk is all generally in simple English. Option positioning, especially the big expirations, like a monthly expiration, a lot of activity, a lot of positions. It keeps prices pinned to those positions. And then when those positions come off the books, right, because they expire in that expiration, they come unglued. And they can move around the premises. Well, what McElliott's talking about get crazy, he's talking about with VIX. He thinks that VIX, because of positioning, VIX could remain suppressed here. Like even if you see a pop like we had here, It's not going anywhere. But as we get to expiration, then there's a chance for VIX, if some buying comes in, to get some momentum behind it. You understand? And if VIX catches a bid and has some momentum behind it, obviously it's going to weigh on equities. You know, you could see now, right? Especially at a time like we're dealing with now, the little VIX, once VIX sellers grab the ball, I already saw like UVXY, put sweep. Once VIX loses momentum, that's when equities find a bottom and catch a bid. But when VIX, when there's buying in VIX, you get some weakness, right? So this is what happened here. Look, 10:15, by 10:30, VIX rolled over. That's it. You know what I mean? Look. That's why, guys, you're in the room, you hear me when I'm hearing and seeing on the tape with VIX futures when they start aggressively selling. You know, to keep an eye out for that. Because if VIX rolls over, equities will, at the least, catch a little bid, right? And that's where it's sometimes looking to get in the middle of. Yep. So that's the story. So we'll see, you know, we'll see how that lines up into next week. And again, you know, for us, I want to come on here and I don't want to rack my brain for names to talk about, you know, that are catching action. There are setups out there. There are things that are set up out there to be bought. There's no shortage of that. You know, again, outside of a few mega cap names, there's some really nice setups out there. But, you know, for me, especially to come on these webinars and talk about them, I need to see sweepers have an interest and get aggressive. And you can use that as a measuring stick, if anything, when you guys come on this webinar at Thursday. The more names I talk about on these webinars, less macro, more names, the better the environment. When I'm talking macro and the other bullshit and not names because they're not buying anything, it gives you a good idea, a good gauge on risk appetite out there. You know? So we'll see. Let's see how it shakes out. That's the beauty of this game. You don't know what tomorrow brings. As always, guys, always a pleasure talking shop. I appreciate you guys stopping by. Good luck. Tomorrow's Friday already. Another week. These weeks go by like this is every day. I get older by the minute. Good luck the rest of the week. All right, and I'll see the majority of you mañana. Have a good night, everybody.